Hey, what's up guys? This is a beer, and in this video we will talk about how I do stock analysis. And this series is basically a series about stocks for beginners. In this video we specifically will be looking at how to do some research on the company, what are the criteria and metrics that you have to consider before buying any stock, and how much you should invest. So if you really like this video, make sure to hit the thumbs up button, and also leave me a comment so that I will understand your needs if you have any, or you can discuss me about your portfolio that you have built. And if you are new to stock investments, then head over to the links in the description box below. Those are referral links to a couple of web apps that I'm using. One is Robinhood, the other one is M1 Finance, and you can sign up for free. We for a stock of Robinhood, we will both get one stock each if you sign up using my referral link, and for the M1 Finance, we will get $20 each if you sign up. So anyway, let's jump right into this video. So while doing some research, I honestly prefer the way of the experts. And the way of experts is to stay in the market for so long that you start reaping the benefits, even if in the short term you see some decline in your revenue or decline in the money that you have invested. Right, so in first place, my favorite website to do some stock analysis is Yahoo Finance. I know it's a beginner's website, and it does not give you in-depth market research tools as compared to some other websites out there, but this is free website, and you can for starters, you can learn and earn good money using this website. So I honestly use this because it doesn't overwhelm you doing the stock research. In this video, we will be looking at the stock of JP Morgan Chase and Company. The ticker symbol is JPM, which has gained almost $1, which is 16.69% of the total value of the stock in the last day. So anyway, the first thing, as I mentioned, to invest like an expert, first step is to invest like an expert. And why I'm saying is that invest in the blue stock companies. What blue chip stock companies really mean is the companies that have grown over the past quite a few years. For example, this bank, JP Morgan Chase Bank, that we are looking into right now, has started sharing their data since March 1980, before I was even born. 10 years, actually 9 years. So you can see the growth over the past 4 decades for this stock. So companies like this, which have been around for more than 40, 50, 60 years, those companies are referred as blue chip stock companies. So first thing is to invest only in those companies. Why is that important? Is they have a proven data to back their company's values, which basically means that if you look at their chart, you can go in the historical data, and you can learn more about what they are up to, and how they have performed over the years. So This was the first thing. The second thing is, since I'm investing in dividends, and this video series is basically revolves around dividend stocks, so definitely I will look here at the dividend yield. So dividend yield is nothing but the percentage of the total earning shares that a company would want to share with you, the benefits as an investor. Say for example, if they are earning $100, the share value is $100, they would be sharing $2.62 every year. This percentage is basically spans over a term of 1 year, and their stock dividend payments happens quarterly. So you can divide this by 4 and you will get how much you will be earning every single quarter, or 3 months in other words. So an interesting fact that I looked at, this website, Yahoo Finance, I'm able to go to the historical data, which is right here. If you click here, historical data, it will take you to the historical last 1 year of historical data. And if you see here, in April 2019, the price of the stock was roughly hovering about $100. It went up and then it went back again to $100, so it was hovering about $100. So the point to notice here is $100, and they were giving 80 cents of dividends on that $100 invested. But now if you see, now the value of the share is almost touching $140. So how much are they giving now is important. And if you go to the latest dividend payment that they have released, they are sharing 90 cents. So basically what I'm trying to say here is, the 80 cents of $100 is more in percentage than 90 cents of $140, right? So the dividend yield basically is lowering down, it is coming down, which basically is a good sign for an investor. So say for example, I invest now 138. I know that from historical data that this company will be able to provide me dividends at over $3 for my $100 invested, since they have done it previously. So where is the rest of the money going? The rest of the money is going, if you see here, another website is CNN Business, which is one of my favorite website. But if you see in the profile section of this company, you see here the number of employees are growing for the past 4 or 5 years. So this is the trend that is going on. So where more of the investment is going is, we can clearly see the investment is going in the number of employees, which will have benefits and everything. So company is growing, it is a blue chip company, and it has a proven record of growth. So another thing to notice here is the PE ratio. PE ratio is nothing but price to earning ratio, and which is under 13, which is pretty good for a blue chip company. And then we have earnings per ratio, which is 10.72. So all these factors basically comes down to what you are looking for. So if you're in the market for long term, we have seen some big drops from, say for example, from here, June 1, 1999 to September 2002, and the price literally cut in half of the share. So $55 here, and then $22 here, less than half the price. But in the long term, if you stay in the market with such renown or blue chip companies, in the long run you see the growth, and the curve is not exponential. You will see some dips, but eventually the thing is, like, you will be gaining some revenue over time. So not only the growth with the dividends will be coming to you, but also the stock price if it goes higher. So we have seen from last year March to now, it has gained over $40 in stock, which is basically more than 40% of the value of that company since in just last year. So you can imagine it's a good company. It's been paying dividends. It is a dividend aristocrat, which means that they have been paying dividends for over 25 years. So all of this basically gives me a green signal. And then if I look here at Yahoo Finance website, they have valued it as a fair value, which basically the stock price is valued fairly currently, and we might see some short and midterm deficits from this business, but in the long term the business looks good, and the stock will go higher. And these analysis, these reports are presented to us by a very few stock analysts, which may vary in number from 10 to 20, but overall you can imagine yourself doing some research on this company, reading through what they have done, what market are they invested in, and how their shareholders portfolio look like. So before ending this video, just wanted to give you one more great benefit of the app Robinhood. So if you see here, Robinhood also shows you 1 day, 1 week, 1 month, 3 months, 1 year, and 5 years of data for this specific company. So if this company has been around more than 5 years, you can also look that into, if you go down here, and analyst rating is important here. So 40% of 25 ratings saying that it's you should buy the stock right now. If you see here, earnings, so except for 1 quarter in 2018, which JP Morgan has missed the payment, all of its stock payments, earnings per stock is basically crossing the expectation. It is going beyond the expected earnings, except for this one play. So for the last 7 quarters, which are listed here, 6 of them JP Morgan has beat the earnings. And then earnings per share actual is 2.57. And another thing that I really wanted to share with you guys, the important thing, the added advantage of the Robinhood app is if you click on replay earnings call, it will take you to a website of JP Morgan and Chase company. Basically, it'll take you to the official website of JP Morgan, where you can find the total quarterly earnings, and the data goes beyond 10 years. So starting from 2005, they have started sharing all the quarterly income. If you click on any of these report, and they have presentation supplement, they have press release, so you can just click on one of those links and you can see the basically the financial presentation that they have created over time for each quarter, and they will list you and give you the idea, if you want to dive in numbers, how the company really is growing, and the pace of the growth and where they are investing, and where is your money going in the foreseeable future. So that's about it. Thank you guys for watching this video. I hope you guys like this video. I really wanted to make this video for quite a few time now, and it's been great sharing all of this knowledge that I have been gaining by learning, investing, and doing the same thing again in the circle. So thank you guys for watching and sticking around. If you guys like this video, make sure to like it and subscribe to the channel, and I'll get back to you with another video. Till then, take care of yourself and people around you. Goodbye.